Okay, we're back in the trading with market and volume profile course. We're on unit number 6. Now we're going to be going into the actual TPO charts, or known as time price opportunity charts. This is going to be the way that we are going to represent market profile when we look at it on a chart. And we're going to talk about its components, including the value area, point of control, and we're also going to talk about the ways and advantages also of splitting the TPO charts into their individual periods. Okay, so TPO charts, as we have discussed, market profile is a way to organize data in a relationship of time versus price. When we talk about volume profile, as we're going to see later, with volume profile, we're looking at volume versus price. TPO charts is going to be time versus price. It is a tool to organize data. On its own, it is not a trading strategy, but rather a confluence of how data is distributed, and we can see clearly where price is finding acceptance or rejection. It also let us see areas where a market was overvalued or undervalued. So again, going back to auction market theory, we said when market is considered expensive or above value, we expect sellers to step in. And when a market is considered cheap or below value, we expect buyers to step in. Unlike other order flow tools like footprint charts and delta, market profile is going to work on all kinds of markets like Forex, futures, crypto, and stocks, because it doesn't rely on precise volume data. So the reason, for example, futures market are so great for day trading and using footprint charts, cumulative delta, depths of market, etc., is because the CME is a centralized market where all the orders are going in through to the same exchange. Then that way, all the charts that you're going to see reflected are actually giving you the exact volume information for that specific market, be it the Nasdaq, the S&P, the Dow Jones, the Euro currency futures, etc. You can use order flow tools on some other markets, for example, like crypto. If you're looking, at major exchanges with very high volume, and you're looking, for example, at like Bitcoin, which has the most volume and liquidity, then you can still use that information, but just be aware that if you're looking at a decentralized market, you are not going to be getting 100% of the volume information on the chart. But with TPO charts, since we're relying on time and price, then this can easily be used on any market, because we are not relying exclusively on volume. But we're going to see, though, that TPO charts and volume profile does go hand in hand, and you can still use it on all markets as well. So in order to display the data for market profile, we use what is called TPO charts, and each of the letters means T stands for time, P for price, and O for the opportunity. Okay, remember we talked about market being an advertising mechanism, so there's the opportunity then for market participants to interact and get in on the trades. So there's two main ways that you can see, or two ways that you can see TPO charts. We have on the left right here, this is going to be the block view. So with this, you're going to see that there's a bunch of little rows of blocks, and then there is the letter view, which you can see we have a bunch of letters of the alphabet, and you can see that we'll usually start with the letter A, and then it just starts going on and on until the end of the profile. In this case, this is just a daily session profile, for example. Okay, one thing, when people look at market profile charts and they look at this, it looks pretty intimidating because it might seem hard to understand. But as I'm going to show you in this lesson, it is actually very simple once we explain all the different components. And remember what we said, market profile is just a way to organize data. So you're going to see that what you're looking at here is basically just a way of organizing the relationship between price and time. So each TPO or each block or letter is going to represent a point in time where the market traded at a specific price. So obviously we have the time scale on the bottom and we have the price scale on the right side. A single TPO is displayed on the chart every time the price touched it during the same period of time. And I'm going to show you in a second a video, just a market replay, so we can see how the profile is actually formed. So most common, we will work with 30-minute periods, okay? So in the case of the blocks, unless you do a split profile that we're going to see later, you can't really tell much. There's some other tools like the shadings, for example. So you can see here how the market is a little bit darker in these areas, and then it starts getting like clearer. So that's one way. But when you use letters, it is a little bit easier to get an idea of how the market moved, because obviously this is going through the alphabet. So we can see we started on A. So then if you look at A, you can see that the A period, or the first half hour of the market open, we covered this area. Then you can see on the B period, we covered this prices, and then we also overlapped this area with the A. Then we can see the C period, we push down into these lower prices, then above here, and then we cover this area, etc. And we're going to show you, you're going to see this a lot more clearer once we see the video for the replay of how this is formed. But basically, every time price touches a new level, then that is going to start creating new parts for the profile. And then as prices in different periods overlaps, that's when we're going to start getting, these little bulks here, these little consolidations, and market or the profile is pushing out the more time it spends here. So TPO charts can use either letters, commonly starting with an A, as I said, or blocks. Okay, so right here I have a chart that I've split. This is a Forex chart looking at the scale. I believe, this is right here. This is the Euro US dollar. So you can see we have a 30-minute chart. And right here on the left, I have this represented just as a 30-minute candlestick chart. And here on the right, we have a market profile with letters. This is taken from TradingView, which until recently did not have a market profile indicator, but they've recently added it. So as of the recording of this on January 2024, it is still in beta version, so it's somewhat limited, but I'm still going to be trying to show you a lot of things with it throughout this course, just because I know the TradingView is, the most mainstream platform, and I'm sure a lot of you are already using it, okay? And what I've done here is I have added on top of every candle, I put in a letter that corresponds with each of the 30-minute periods. So you can see how the market profile moved in relation to price. So this is what it looks like when we split a profile, which I'm going to show you later. But you can see right here, when you have the candlestick, with candlesticks, we have 4 pieces of information. We have the open, close, low, and high. With the market profile, you basically all you see is just the range, the high and the low for that period. And so you can see how each of these candlesticks represents that same period in the letters. So the letters are going to encompass the whole candlestick. The body and the wicks are going to be the same as we were looking at it right here, for example. Okay, let's go into the next slide. And then this is another representation, the same Euro US dollar chart. This is now on Sierra Chart, which is going to be the main platform I'm going to be using for this course. But again, you can use any platform that you want. Most professional platforms are going to have all the functionality that you need for the TPO charts and market profile. Okay, and here we have the 30-minute candlestick representation. Here we have a letter TPO chart, and then here we have that same TPO chart, but this is going to be the split version of this profile. And so you can see right here, this is 3 different ways of pretty much representing the same data, in this case in Euro US dollar. We open right here, which is this point right here, and then you can see market push down, then we have a move up, and you can see same thing here. Remember, Forex is a 24-hour market. So if we're looking at 30-minute periods, that means we have 48 TPO periods in a day in the Forex market. And each one of those is going to be represented by a different letter in this case. So you can see same thing here. We open the A period, then we have B, C, D, E, F, H. We got a push down. We made a low during the R and the S period right here. Then we pushed up, etc. And then we finished and closed the day off right over here. Okay. And now the advantage then of having the TPO chart all together is we can see that we have in this case sort of a B-shaped profile. So what this is telling us is that the market for most of this daily or this day, the most time that the market spent trading was around basically the lower half of the TPO profile. Okay, so this is indicative that we pushed up, but prices were considered too expensive here, and there was not a lot of buying interest at this highs, and most of the accepted value, as you can see right here, this is the value area. So this is the 68% of the time during this daily session was spent within this value area right here, which is represented. This is the value area high, this is the value area low, and then this is, we're going to talk about this later, but this is what we call the point of control. Okay, so the point of control in this case is very close to the opening, and this represents the longest period, or the period where we accumulated the most time traded within this entire profile. Okay, this is the same chart, but this time we're representing it in blocks. So you can see same thing here. We opened over here, we had a push down, up, then this big wick right here, which was this period right here, push up, and then we just trended down and ended up closing here. And you can see again the B shape of this profile right over here. Okay, and now let's go into Sierra chart, and I'm gonna play you a video of how the profile is developed throughout a trading session in the E-mini S&P futures market. Okay, so we are here in Sierra chart, and I have on the left side here, this is the E-mini S&P futures. This is a 30-minute chart right over here, and this is the market profile. You can see this is all part of the template that you have available to download in this course. So you can go to the trading platform section and find the document, the CHT Sierra file, if you want to install and follow along with it. But you can see right here, we're going to analyze this session. I have it split between extended hours and regular trading hours. So this specific session we're going to look at is from February 7th, and this is going to be the regular trading hours from 9:30 a.m. Eastern all the way to the 4 o'clock close. We'll actually have it until 5, which is the daily settlement. So for this candle, if we go to the time chart here, and let me grab a rectangle tool, you can see we started the 9:30 candle, and I'm just going to push this profile all the way until basically 5 o'clock, and we have it right there. So you can see this period right here, this is all the 30-minute candles that make up the regular trading hours of the stock market, and that will be this same profile right here. Okay, if I wanted to split that, I just right click on it and I just put letters, blocks, and own column and standard profile, and there you have the split version of this. Okay, but let's just undo this, and now I'm going to, let me just take this off, and let's go and put a replay so we can see how this market profile developed throughout the day, and you can see how this thing forms. Before I start the replay, I'm gonna switch this over to letters just because for this example it'll be easier just to follow along with the letters, because that way you can just follow by the alphabet. You can see we open right here on A. So let me just set up the replay and we'll get started. Okay, so I started the replay here on Sierra Chart. This is a great tool that I recommend everyone use. So just on the chart menu, it's right here, chart replay. So this is my control panel. I'm starting this. You can see I put in the clock right here. You can see a clock for the time, and then this is a countdown clock for the next 30-minute period. And on the 30-minute chart, we are starting off from this arrow that I pointed, which is going to be the 9:30. So right now it's 9:25. So we're still on the extended trading hours profile. As soon as 9:30 hits, we're going to start forming the regular trading hours profile, and we're just going to observe how it forms, and I'll walk you through it just so you can have a really good grasp on how this profiles are going to be forming. So I'm going to hit play. Right now the market is pretty slow because, as always, you know, the most volume and liquidity is going to come in when the regular stock market hours open. I'm going to make this faster just to get the time going more. Right there. Okay, so it's 9:28. Okay, we're at 9:29:09. I'm going to go down in time now. I'm just going to leave it at 5 times normal speed. I'm going to hit play. And you're going to see as soon as 9:30 starts, a new profile is going to start forming for the regular trading hours. Okay, here we go. So now you can see, so let me pause this. So you can see how we closed out the 9:30 period here. So that was the close. This close was represented right over here. This candle here was this close, and now we're immediately opening into this next candle, which is going to be this one right here. And you can see we're starting with the letter A. So basically between 9:30 and 10 a.m., it's going to be what we call the A period. You can see this is a backwards timer for the time left in this period. So let's just hit play. And you can see how now, as price moves and makes new highs or lows, the A's are just going to start extending into the corresponding prices here on the right side on the price scale. Remember, the minimum measurement in this case for the S&P 500 is 1 tick, which is 0.25 points. Let me make this faster now. Let's put 30 times normal speed. And now you can see the time is clicking away faster. We're going to talk about the chart elements soon, but here's your point of control. Here's your valley area high and low. So everything within this valley area represents the 68% of the time that this chart has spent in that range. Then here, we're going to talk about this later, but this is the initial balance. The initial balance is going to be the first 2 periods. So period A and B, the first hour of trading, is what we call the opening range or initial balance. And there's going to be a lot of strategies that we can form based on that we're going to cover later. So period A is about to finish. And now you can see now we're on to period B. So from 10 a.m. to 10:30, we're going to have period B. You can see the current price line is where this red triangle is. And you can see right now the extremes are marked by the period A. As soon as period B comes to any of these extremes, it's going to start forming a new line right there. Okay? So see, let me pause this. Okay? So you saw what happened there. This is an important concept because in the beginning, people think that all the letters are going to be side by side, just extending like this. But in reality, as soon as, in this case, as soon as B broke the high from level A, now we go to this side and start forming B values, in this case, on top of the level A. And you can follow along here. You can see period B was a very big bullish candle right here. And you can see that actually after period B, the next few periods are all within the range of V. So we're going to start accumulating more volumes right around, or not volumes, more time right around this area on the next period. See, there's period C. We did go up a couple of ticks above B, which is represented by this tiny wick that we had right here. And now we're starting to come down. So let me just accelerate this more. So now the time is going to be going by very fast, but I don't want to make this video super long. But you can see how now there's gaps here that have not been filled. But as soon as any of these prices come down, they're going to start filling all these levels outwards. And basically, the more time is spent at a certain price range, the more this is going to be sticking out. So just like with the volume profile, the more traded volume we accumulate, we make high volume nodes. In market profile, the same thing. The more time we spend at a certain area, then the bigger and bigger this edge is going to become. Okay, so you can see we still have a gap here on the B period that hasn't been filled. So then this we would interpret as a significant support level in this case. And there's other elements such as this is what we will call singles. We're going to talk about all these elements in future videos. For now, I just want you to get the concept of how the charts start forming, okay? And you can see right there, now we're in the H period. This, I can make it into blocks. So the same thing would be with blocks, only you can't really tell what period is what unless you would go and split this. Once you make it split, then you can see the regular profile, plus you can see each time period, which would coincide with each 30-minute candlestick as they are forming from left to right, okay? But let's merge this back together. Let's make these letters again. Let's zoom in, okay? So basically you can see right now we're on the last trading hour. It's 3:15 right now. And so as soon as we hit 4 o'clock, this is just going to stall and is going to stop because it's going to be the end of the regular trading hours between 4 and 5. It's pretty much very low volumes until the settlement is set at 5 o'clock. In this case, we're talking obviously about futures market. If we were looking at a crypto chart or Forex, then we would just be looking at 24-hour periods for the day. Okay? And, you know, pretty much that is it. We're coming over into the 5 o'clock hour. And I'm just going to pause this right here. Okay, and you can see that's pretty much it. Right there, we closed the session. So this is the resultant market profile for that day. So we had our open here, a very wide initial range from period A and B. We had our close up here, which this is a bullish sign, the fact that we opened down here and then we ended up closing near the highs. Oh, let me pause this. You can see that now this is the opening of the next session in the evening, the next extended hours, but we're not going to be talking about this now. Okay, and you can see, for example, here, we left this edge right here, which would be represented by this. So this gap that we left here, it's the same as this gap that we have right over here. So then in the future, for the session in the evening, this is going to be a very significant level because you can see this was a very strong level. We have what we call an edge right here. Basically, in this consolidation, we had a very clear edge of support right here, and we had an edge of resistance right over here. So this is going to be a very important area to watch in the future. Okay, so that's pretty much a summary of the video of this. Let's go back to the presentation. Okay, and we already talked about this, but the TPO chart splits. So again, this is the representation of the TPO chart all together. And then this is how you can see it all split up, open down over here, close right over here. And if you split it into all its periods, you can very clearly see, you know, how this market moved. Same way you would see it if you were looking at a 30-minute chart. Okay, now the components of the TPO chart, the value area, I talked about this a little bit earlier, but represents 68% of the data within one standard deviation from the mean. So we have the mean here, or what we would call fair value, and then we have 34% to one side, 34% to the other. So value area of 68% right here, value area of 68% right here. So this represents 68% of the whole time that this session was taking place. We spent 68% of the time here and here, okay? This is what's considered fair value. This is where buyers and sellers have agreed more on price, okay? So this is where markets are more in accordance with price between buyers and sellers, and this is areas where price tends to get a little more choppy. That's why, as we're going to see later in the trading strategies, I do not really recommend trying to get into positions right around the middle of these value areas, because you don't really have a good risk reward in those places. Then the point of control in market profile is the price at which the market spend the most amount of time trading in that period. This is considered, acts like a magnet for prices, as this is considered the ultimate fair value. It is always the most extended point on the profile. So it's very easy to identify. Basically, you just look whatever point is sticking out the most, wherever has the most block, TPO blocks or letters, that is going to be our point of control. This is the ultimate fair value of this entire profile. And you can see here, we also have a concept that's called a naked point of control, which basically a naked point of control means that it's a point of control on a profile that has not been touched yet. You can see all these points of control, price has not come to touch them yet. So this is what we would call a naked point of control. And as with other trading concepts, points of control are best when they are untested. Okay, so this is going to represent very important areas to pay attention to when we're trading, because they're going to make great targets. So for example, here, if this market starts trending down, main area we're going to look for is going to be this node that we have right here, plus the naked point of control. Same thing down here, we have this node here with a very clear edge of that we had of resistance that we broke up, plus the naked point of control, etc. And then same here, this is an example where we have a market with, this is one session, this is the next session, we have the split and the regular, and you can see how here this day we opened up here, closed up here, so we left what would be considered like a double distribution, where we have a profile with two main areas or two nodes of values. And then you can see the next day or the next session, we opened up here, trended down, we pushed up above the highs here, but quickly rejected. So this was a false breakout. And then immediately price went all the way down, straight into the point of control of the session below. And then we had a very nice reaction and a bump on this. And then you can see we actually ended up with a pretty balanced profile here. Two big excess wicks on either side, and just the main value area all concentrated around the middle part of it. But you can see how the naked points of control are very important areas to target for prices. Okay, and that's pretty much it for the video. See you all in the next lesson.